Okay, it's May 5th. This is Shane with the Rational Trader. And we're going to go over an analysis of start time in sort of normal conditions and in the more volatile conditions we have right now. And then we're going to talk about this weekend's release. Really, it's really tonight, which implements user-defined strategies. So your ability to specify when you want to call for a prediction and then get one. And then an update on the order flow momentum change that is causing some folks with lower powered systems some issues. Okay, so let's get started. So let's look at, and there's a test running in the background, which is why you see all this flashing here on the lower right. Let's look at this chart first. This is the chart of the NASDAQ, a daily chart. This is actually in the chart book, so you don't need to recreate this. And this middle graph, actually, really the bottom one is the one to look at. The bottom subgraph shows the orange bar is the range for that day, and then the blue line is the average range for the last 10 days. And so that's really what the middle one is. It's the same as the blue line here. All right. And what I do when I create the models now, I'm clipping these big days off. All right. So they're not skewing our models so much. We talked about that a couple weeks ago. But in general, if you look at the average, I have a red line drawn here. All right. And you can kind of see right there is when the markets started getting crazy. All right, and so if we sort of use that as the point to understand, okay, we're in volatile conditions versus normal conditions. This is where we would apply our volatile market rules. And last week or the week before, we'd gone through a fairly complete analysis of different factors and sort of how to decide what to do on any given day, and then also how I build the model. So when we get to volatile times, I start building the models with targets that are further out, and we start trading at a later time. And then if it's over a certain amount, the overnight range, we may not trade at all that day. All right, so an idea that had come up was, well, when the market's this volatile, maybe you should start even later. And I saw a direct example of that one day when I started at something like 6:45. Or it might have been 6:35. And then I had members that were starting after 7, so 30 minutes after. And they did really well, actually, and I got whacked pretty quickly. And so what I wanted to do was look at, okay, well, what is the difference between starting at 6:35 and starting at 7:05? So starting 5 minutes after the session opens versus 35 minutes after it opens. So give it 30 minutes to settle down in these volatile conditions. Okay, and so that's what we see on the right here. Okay, so this is, let me make that bigger so that's not distracting. This is on the right. Start using the February 2nd model and then replaying from March 9th. And we choose March 9th because that's the start of the M contract. All right. Ideally, you'd start on February 5th, but then you got to do 2 separate replays with the different contracts. All right. So March 9th through the present, and then this blue line, this blue cell here is the end of the month of March, and then here's the end of the month of April. All right. This first one here is starting at 6:35. Okay. And this one over here is starting at 7:05, so 30 minutes later. All right. And what you can see there is there's actually a fairly dramatic difference. And when you dig into it, what you see is that there are cases where you just get whacked early and then take yourself out. All right. here again, and here again. Okay, so that's what's happening, and so my conclusion from that is that this idea that when the markets are this volatile, let it settle down even more than we have been, and then continue, and then start trading. That looks to be pretty sound in terms of, this is 2 months of data here. It was very clearly the case in March. In April, it's about the same when you just sum it all up. So if we just sum up the April, that's 28.90, and here it's 27.40. So it's basically the same. It's different by $100. Here, this is $2,000, right? This is 40. It's a big difference, even in percentage terms. It's big. If we look at the market during that time, if we look at the difference here, it's interesting because here's the beginning of March, and then here is the end of March, right there. So in March, what we saw is there's a pretty dramatic difference in starting later. In April, not so much. And the way I read this is the problem with the average daily range here is it's a little laggy. And so this is actually showing pretty big here. But in reality, these days are dropping, right? And so my take there is that March was pretty dramatically better, and April about the same. Even though when you look here at the average, April looks higher. I guess through here it might have been higher. I guess it's a little tough to tell without doing a more formal mathematical analysis. In any case, even with just the data you have, you can see that starting at 705 instead of 635 certainly isn't worse, and is potentially a lot better. All right, so my conclusion is, while we remain above this red line, while the average is above 100 points a day, is that what that is? Yeah, the average is above 100 points, average daily range, then start at 705. And what you do is you end up avoiding more of these cases where you're getting whacked early and then taking yourself out of the market. So those cases. All right, this one's really dramatic right here. Okay. So your mileage may vary, and certainly you can make your own choice. But here's another one. In general, that looks like a reasonable conclusion. There's another set of numbers up here, and we're going to talk about just the non-volatile times in a minute, okay? Because the same question comes up as well. If it's better to start later during these volatile times, is it also better during regular times? My hypothesis would be no, but we can test that hypothesis very easily. So I've done that. But there's another set of numbers up here. This number here is the number of max loss days out of the total number of days that are there. So 18 out of 37, you got taken out completely. So that's just under half the time, which I'm a little surprised, but that's the number. Even with basically 100% on your capital in a month. And then starting later, it drops to 40%, which is pretty interesting by itself. So that's something to think about, depending upon your personality. And this is going to come up again in a minute when we talk about sort of normal times. Okay. Now, so if we look over here, this is using the model built through December 7th and then testing on 12/8 through February 2nd. All right, so February 2nd is kind of like that demarcation point where the market switched from normal to crazy. And this is the 6:30 start time, 6:35. And T30 means it's the model I build for the non-volatile time, so the 30 tick target model. All right. And December is a month where we struggle. You're basically flat, and over here it's about the same. You'll notice that there are days here where we actually didn't take a trade. So all of the trades were happening early on those days. This is holiday time is what this is. This is the days around Christmas holiday. So it would be reasonable to actually take out this whole set here, because we're probably not trading that week anyway. Looking at January though, it's fairly dramatically different. So this is 6:30, and there's the gain. Starting at 7:05, and there's the gain, and it's half. Okay, and so what that means is that half of your profits are coming in that first 30 minutes. So it's important. This is normal volatility, not the crazy action we've been seeing. Okay, in both cases though, you'll notice that slightly more than half the time you're getting taken out completely. That's an important number to internalize, because even in normal times, that's a 60% return on capital across 2 months. It's very good. Still, slightly more than half the time, you're taking a max loss. Okay. It's not what you want. As humans, what we'd rather have is we'd even accept a smaller number down here if it meant that you had less of these cases where you're just completely taken out of the market. All right, but it's not the nature of just the random nature of the market is such that it doesn't work that way. All right, so the one way to think about it is we always come back to don't limit your upside. And so that's what you see. This is a very concrete illustration of what happens when, even though half the days you're taking a max loss and you're out, the other half, because you're not limiting your upside, more than makes up for it. And then the key here is that this is all done without any human emotional input. All right, it's all mechanical. Randy, I always end at 9 o'clock Pacific, so it's kind of really the beginning of the doldrums, really. Now, having said that, I'm actually working on an ES test right now that goes all the way to 12:45, but uses a user-defined strategy, not the same behaviors that we're doing here. Okay, so this is some input for you. I'm gonna start doing this just starting at 7:05. I don't see any reason not to. And once this settles back down, then we'll switch back to 6:35. There's a pretty clear line here. It's interesting. I had the sense the markets were settling down, and yet when you look at that, that's not what that shows. Certainly, if you're looking here, that might be why I think that. In general, what I've been seeing is that the overnight range, when I come in every day, the overnight range is kind of between 50 and 60 points. And that hasn't been the case for a while. It's been, you've had these days where it's just some crazy number. And so that might be why I think that. So we'll see. There's no, I don't need to be, to do a subjective assessment. I have a very clear objective analysis here. So I'm going to wait until this line, till the average drops below 100, and then I'll start building, 30-tick models for the NASDAQ and change my trade time to 6:35. Gerard's asking, basically, why are the end times the way they are? Because it's when I ran the test, Gerard. So I didn't run all these. I didn't run all these this week. They've been scattered across. Okay, so next topic here. Yeah. Okay. So Richard is asking. So Rick, you can actually. This chart is in your chart book, but is it that one? Yeah. It's. I think it's a simple moving average. Yeah. Well, the ADR just gives you an input. You just give it an input. I don't know what they're using. I think it's simple because I added this moving average and it's the same. So I think it's simple. Let's see. Yeah, simple moving average of 10. Okay. This is the chart book that is going out tonight. So these are in there. They're in there from the last time too. So that chart is there if you want it. Okay, so what was next on our agenda here? That's the wrong one. All right, so if we recall from let's see, it's in here somewhere. Here we go. So there's 4 pieces to what we're doing here, and every week this orange machine learning models gets updated, and you download that and install it. All right, but this week all 4 pieces are changing. Okay, because we're implementing user-defined strategies. So what user-defined strategy means is that you define whatever you want, and then when it signals, it will call for a prediction. All right, so I'm going to put together a video that helps explain how to do that, and then we'll work through any questions. So the DLL is being uploaded tonight. That comes from the Sierra Chart servers. So when you log in tomorrow, it'll automatically download. You don't have to do anything for that. All right, but the chart books, the weekly models that are normal, and the server are all changing, and they have to change in order to support the user-defined studies, because the custom study is now sending some additional information to the server to tell it, hey, ignore the normal rational trader behaviors and just look at this user-defined signal, and then give me a prediction if it's true. Okay. The chart books have to change because the way that we have to tell the chart book to send this extra information. If you have made lots of edits to or modifications to your chart book and you don't want to have to replace it and then make those modifications again, I'll show you what you have to change. There's 2 things. It's pretty simple. Okay. No, there's no order that they have to be installed. They just all have to be there. If it's not correct, you'll get an error and no prediction. And the error is pretty clear. It'll say something like, I expect 6 positional arguments and I only got 5, something like that. All right, so let's go take a look real quick at the chart book and what's changing in there, and then let's go over, like, there's a test running right now. Let's go look at that. That's a good example of a user-defined study, and then maybe that can serve as the tutorial for tonight. All right. So if we look at the study, did this finish? Not quite. No, that's a bummer. All right. Let's go ahead and stop it. If you look at the study itself, it's this TRT ML predict. Okay. And if you open it up now, there's 2 extra settings. Okay. The first is do you want to implement user-defined behaviors or not? Do you want to use your own strategy or not? Yes or no? So this one over here is what I run in production that uses the traditional, 4 behaviors, the turn, the pullback short, pullback long, and breakout. Okay. So the next setting is not needed. But over here, it's different. Over here, this is an ES chart with a Bollinger squeeze study on it. And what I'm doing is when the squeeze fires, I want a prediction. All right, and so we can see here while this test was running, like right here, this is a better view here. So here, the market went into a squeeze, right? This means that the Bollinger Bands are inside the Keltner channel. And then when it comes out, that we have a color bar by alert condition that signals, and that's when we say, give me a prediction, long or short. All right, so if we go back to Monday was a good example here. So when it's red, the market's compressing, and then when it's no longer red, then that means, okay, I'm breaking out of the range, basically, would be the way to think about it. But something's wrong here. What am I looking at here? So you can see here, it went short, but why isn't my bar orange anymore? What happened? Oh, do I have it open? Let me close this. Hang on a second here. All right, so basically the way this particular strategy works is when the market goes into a squeeze, like you see right here, that means that the price, it's a mathematical way to identify price compression or range compression. And then when it breaks out of that squeeze is when I want to call for a prediction, because what I'm expecting is that the market's building up energy, squeezing like a spring, and now it's releasing. Okay, and so what we get here is a prediction, and unfortunately the codes are gone because I changed it. But this came back with no prediction, 399, which is no target. Don't do anything. Same thing here. Same thing here. Here it said get short. Okay, and so you can see the fill right there. And I'm using, in this particular case, I'm using a 6-tick stop, and then get up by 4, trail by move the stop to -2, and then get up by 8, start trailing by 8. All right, but the point is that I'm only going to get a prediction on that bar and that bar. So I'm identifying in the market the behavior that I'm interested in, and then because we've built the model now in such a way that it's not dependent on some specific rational trader behavior, rational trader defined behavior, then it'll give you a prediction. All right. This happens to catch the full 6 points there, so then it just exits down there. And then you can see a dot right there. So for briefly, the market went into a squeeze and it came out. But I told that alert condition only I need to see at least 2 dots. All right. And then here, give me a prediction. We didn't do anything, so it must have been 399. Same thing here. So the prediction is the market will go sideways. Here we also don't get a prediction, and that's unfortunate because the market falls nicely. And so on and so forth. So again, where you see it yellow, we're getting a prediction back. And I have this going all day because this particular strategy seems like it would be okay. So here we get the prediction to get short. The market gets short, and then actually no, that's a get long. So that's a stop. Here is another get long. Okay, take a stop. Here we don't get a prediction, unfortunately. Same thing there. Or the prediction is stay out. That's the prediction. And then here it's get short, and that's a nice run. So you can see. Now the way that you implement that, the way that you do it is you have to create this signal. So this is a color bar by alert based on alert condition study. Okay, so you have to add this and then code it up in here so that it triggers when the condition occurs that you want to get a prediction on. Okay. So what this says is when the squeeze fires, if there's been more than, if you've been in a squeeze for 2 bars or more, then signal. All right, so then this is, you'll notice this is ID 11 up here. All right, so then in the ML predict study, here we say prediction for user-defined behavior, yes. So over here you will call it said no. Here it says yes. So now you have to choose something in this setting, where you go and you pick the study, and then the subgraph. All right. So SG1. If it's a color bar based on alert condition, it's going to be SG1. When this subgraph evaluates to true, you're going to get a prediction. When it doesn't evaluate to true, you won't. All right, so it's in that respect, it's very simple as long as you know how to do, as long as you know how to do a color bar based on alert condition. Okay. No questions. All right. I've been burning this in for a week now. The big problem actually was not the study, which has been ready for a while actually. It's that the models made assumptions about the chart type. So the models were making assumptions about that it was a range bar chart. And so when we would send the data to the server, the data was actually not correct because it's formulated as if this is a range bar chart, but it's not a range bar chart. It's a tick chart. So we had to make changes in 2 of the studies to fix that problem. Okay. It's ID11.SG1. Yes, Larry. Anything that evaluates to true or false, Russell. Randy's got an unrelated question here. J89 Sal. Yeah, this is the cell where you tell the spreadsheet study if you have an open position, close it, flatten it. And that's 1 minute before the cached session close, Pacific time. Okay. Now, let's assume that you have one of the tricky parts about doing some user-defined behavior is that the studies that are here before the predict study can't be changed because the predict study is referencing them. All right, and this directional push actually is really tricky because it's referencing this other chart here. So if you want to do this, what you really need to do is take an existing chart book that I give you and modify it. Okay. Don't try to create it from scratch. You will absolutely screw it up. All right. You actually don't have, not because you're not smart, but because you don't really have the information on those relationships. Okay. So ultimately what's going to happen is this study is going to be completely self-contained, and you'll be able to just plop it on and go. But right now you can't do that. Right now it's looking at that study and that study and that study, and it expects them to be a certain ID number, and if they're not, it won't work. You'll get wrong predictions. All right. So what you want to do is take this chart and then modify it. Put onto it what you want in order to make it your user-defined strategy. Don't try to do it from scratch. Okay. Now, having said that, if you're getting new chart books this week, and that can be annoying because you may have modified your chart books already to add things you like to see. That's fine. There's an easy way to alter it so that it works. Okay, you have to change two things. Okay, let's do it over here because this is the chart that you'd be doing. So two things have to change in order to get an existing chart to work with the new DLL and new server. Okay, the first thing is that in order flow, you have to change number of exceptions to 1. It's currently 0. Change it to 1. Don't change anything else. Okay. The second thing is in the predict study. Okay. This string here has to change. All right. Now, what this setting does is it defines what information does the model need to make a prediction, and what control information is needed. Okay, and ultimately this won't be here. Ultimately that'll be hard coded into the DLL, and you won't have to worry about this. In the same way that ultimately the predict study will be just put it on a chart and go. All right, but right now I need the flexibility to change it around without requiring the programmer to do something. And so what this string does is it says, okay, send this data to the engine for a prediction, and that data is changing in order to implement user-defined behaviors. All right, and so when you get your chart book, you're going to get a file. Hang on, let me find it. You're going to get a file that says rev55 subgraph send string in it. Okay. So if you just want to use the existing chart book, then, or the one that you download, the new one, just use it and you're fine. You don't have to do any of this. But if you want to keep the chart book you have because you've added a bunch of stuff to it, then open this up, and it's just this big long string, and just copy it. Copy the string. And then come over to the study, the ML predict study, and replace this string. I backspaced and now Control V. Okay. And now it has what it needs. All right. Only if you don't want to download my chart because you've made so many modifications to your existing chart, you don't have to make them again. Okay. All right. So I'll create a separate little video just for that. Okay, and for the user-defined behavior stuff. And that'll go out tomorrow. The note that late tonight or very early tomorrow morning, everything will be uploaded and available. Okay, though the video may not come out till later on. Okay, so you could come back and watch this if you've forgotten what to do. All right, last thing here is the is this right? The last thing. Yeah, the order flow momentum. Okay, so one of the things I just mentioned, right, was that ultimately we want want to be at a point where you just put the predict study on and that's it. It works. Right now, though, it's referencing 3 other things. It's referencing this the TRT directional push study. It's referencing the order flow study, and it's referencing the extended move reversal study. All right. And what we're doing, what we've discovered as we've been comparing results between me and people out in the wild, is that there's some timing issues with this directional push study. All right, the directional push implements order flow momentum. Okay, and what it does is, here, let me turn it on. I'm unhiding it. And what it does is it shows momentum, which is part of the input to the prediction engine. And it's calculated from a time-based chart. It's not calculated from the range-based chart. It's one of the reasons it's so useful, because this is a price-based view of the market, but a time-based view is also interesting. And so that's what's happening over here on this chart. This 15-second chart is looking at the order flow. Actually, it's looking at the difference between the bid and the ask, and then we're calculating momentum of the market based on that difference. So if there's more buying than selling, and that continues for end period of time, then we say, okay, the momentum is long. All right. And the problem is that, and this has worked for years, I've used this for years. The problem is that now what we're seeing for some folks is that there's a timing problem between when this chart gets the data, when this chart gets its data, and then it calculates its studies, one of which is referencing this chart. And for machines that are lower powered, there's some delay there. All right, you can test this actually by changing your refresh rate. You don't want to do it, but this is kind of how we figured out what the problem was. All right, so what's happening now is we are sort of along this path of getting to the point where you only need the predict study and nothing else. The first thing we're doing is we're incorporating this directional push the order flow momentum behavior that's implemented with the directional push study is being put directly into the ML predict study. Okay. And then, so that will solve, hopefully, that will solve a problem that some folks are having where their predictions are different. All right. We expect some amount of difference just because of the timing related to delivery of the data, but we don't. It shouldn't be huge. And what we're seeing is some people are just radically different. And then when I went and dug into it, I suspected that the issue was related to this chart after a lot of really frustrating effort. And then in talking to the programmer, we identified, okay, what, how that could be the case. And since I want to eliminate this dependency in the ML predict study on other studies anyway, okay, let's just make this the first one. It's also the hardest to do, so let's just get it done. All right, so at this point, there's an alpha version that we have that is creating the same order flow momentum signal on this chart, but without needing this chart at all. Okay, so I expect to get a beta version of that next week, and you'll see me testing that, and then once it's available, it will. That's going to cause. Let's see. Yeah, so once it's available and we want to implement it, there'll be another chart book change, or at least a change to the subgraph send string. So Russell's saying it's odd that no one's complained before. It's timing, Russell, in that, or it appears to be timing, in that as soon as the bar finishes closing on this chart here, the data gets sent to the prediction engine. This is, in milliseconds it's sent. And then you get a prediction back, and there isn't enough time. All right, and the machine learning systems are really sensitive to the input data. And so you and I as a human don't seem to have a problem, but the machine learning system is clearly sensitive to it. Larry's asking, what's the setting for the light purple flag on your chart which you changed from blue? Oh, you mean the order fills? This here? Okay, so unrelated question here. Let's come back to it in a minute, Larry. All right, so anyway, I'm working to eliminate this dependency. Okay, so you'll probably see that in the room next week. And then once it's burned in, my goal was to get it done by the end of May, so we should easily be able to beat that. And then over the next couple of months, we'll get rid of the other ones. Okay. We'll get rid of order flow and extended move reversal. So eventually, you'll be able to just take this ML predict study and put it on a chart, and it'll talk to the server. It won't be so touchy. Okay. At the same time, I'll be at the same time I'll be removing that or flagging it so that you don't need to worry about this. Okay, this is necessary for me to be flexible enough to test and make changes and things like that without needing a programmer. But we're pretty stable at this point, and as long as we stay stable, then I'll hard code this in. And this is all in the service of making this resilient, right? Making it easy to use and not easy to break. So any other questions? Okay, so while any other questions come in, Larry's asking, how did I change this color? And we have Davey to thank for that. So there's two places to change these different things. So you've got the colors of these order fills, all right, and actually the color of that, and then the size, all right. And so they're in, let's see if I remember now, global settings, chart trade settings, here. So fill marker size, that's these triangles. Okay. Large. And then the font is, the size is this here. All right. But the color is elsewhere for some bizarre reason. Okay, so that's the size of the font and the size of the little triangles. Okay. The font is, the colors are in global settings, graphics settings, I think. Fonts, no. Chart trading order fills. Buy entry, sell entry. It's not this one, hold on. It's one of these. Okay, yeah, this is it. So buy entry is, I have this as this green color, okay? And then buy exit, I have as this lavender color. And then sell entry here, I have as this bright red color. And then sell exit, I also have as the lavender color. Okay, so chart trading order fills, buy entry, buy exit, sell entry, sell exit in global settings, graphic settings. And there's so many here. It's about halfway down, okay? And there's no rhyme or reason to the order here that I can see. So you got to be careful because there's chart trade window, chart trade mode, chart trading orders, chart trade order line. Hey, you're looking for chart trading order fills. Okay? Never let it be said you don't have options. Is the P&L portion of the flag under chart settings also... I think it's in chart trade chart. I think it's here. Chart trade settings. Yeah. Display trade profit and loss. Display fill text. Display price. Okay, I think it's these choices right here. These checkboxes here, Philip. Display entry exit connecting lines. Okay. If there are no other questions, then I need to get to work here. I think there's a lot to do. So tonight you'll get... Oh, shoot, I forgot one thing. Darn it. You've seen me working on, and I just kind of showed you this this user-defined chart here. This happens to be a tick chart in this case. And I actually really like this particular strategy. Just squeeze and then break and get a prediction. And so I was curious if there was a difference in the performance of this particular strategy if I used the regular model, which is built on range bar charts, versus if I built a model using this tick chart, using 500 tick chart. And so I did that, and that'll be coming out tonight also. So you'll get the normal set of models, but there'll be an additional one that is a Rev 55 T500 ES chart. Okay, so it's there if you want to use it. Okay, and it's a model built on the 500 tick chart, as opposed to built on a 4 tick range bar chart. I suspect it actually might be better. So we'll see. And it's available now for us to test it. So in addition to that, the chart, you're going to get new chart books tonight. I'm going to include this chart book here. This is a separate one, right, that implements this user-defined strategy and happens to be a tick chart. So you can play with this one as well. All right, so when you download your chart books, there's going to be an extra chart book there. And when you download the models, there'll be an extra model there, which you don't need to use if you don't want to. All right, the log file, the YAML file will reference all the normal models. So any last questions? John is asking how to install it because he's got a new computer. Go to the YouTube channel. So just go to here. Let's just do it together. Go to YouTube. Okay. Search for the Rational Trader. Okay. That'll get you to here. Okay, click on the Rational Trader, and then go to Playlists, and there is a Installation and Tutorials playlist. Okay, and just start at the top. Okay. If you have any questions, just holler. All right, this is pretty comprehensive, though. Are you ready to vet any alert conditions that we may be working on? No, Larry. First of all, you need to do it yourself to make sure that it does what you think it does. If you have problems, I'll try and help. Ultimately, one of the things we talked about was creating a community of or a download section for charts that implement strategies that are created by our little trading community here. The exact form that takes is not clear yet, but it will be. You won't just throw a chart up and say use this. That's not acceptable. All right. What I'll expect is a chart and an explanation of how it does what it does, and a spreadsheet that is the trade activity log from a replay that you've run, with details on what model you used and what time frame. You need to demonstrate. It needs to be a package that demonstrates, this is worth someone's time. So what'll happen is I'll end up creating something like that, say for this particular strategy that I like, and then I'll kind of walk through the process of, okay, this is what I expect to see. And then we'll see. I mean, if there's a handful of uploads, then all right, that's no big deal. If there's 100, then that's a problem. I don't have time to look at each one of them if that's the case. Yeah, Telly, I would wait till tomorrow, and you'll be starting off from this spot here. Any other questions? No. Okay, so look for a message later tonight that says everything's been uploaded. There'll be a video. It won't be out till later tomorrow, maybe even tomorrow evening, on sort of how to do this, how to do a user implemented, a user defined strategy. So if you are ready to do it and that video hasn't come out yet, you can just come back and watch this portion of the video, because it's just going to be that. And then any issues, we'll work through next week. I've been using it for a couple of weeks, actually. It's just the model hasn't been correct until this week. Okay. All right.